All right, hey, it's your boy Toby Ripto Capital. Get a lot of questions about owner financing. So today it's August 14th. Kids are back in school, shooting a little content. Hey, it's 2025. Rates have been coming down. Base rates, high DSCRs, great credit down in 6.5 range right now. So refinances are picking up, but I've got a few people that are struggling to get some deals done, like in today's, well, really when the rates are higher, if you've got lower credit, but it's a tight lending market right now. Our underwriters are crunching down. I mean, they're definitely crossing their T's, dotting their I's, whatever you want to call it. But right now in this market, seller financing might be something you want to consider, maybe kind of like a secret weapon, especially for you real estate agents that are out there and are direct to seller. You know when they have a traditional loan in place, and maybe a sub-2 doesn't work, or maybe they have it free and clear, and maybe they're looking for a little bit of cash, but they'd like to defer capital gains tax. So, monthly income might work for them as well. Everybody, but hey, it works, especially when you kind of get dilapidated properties or harder to move properties, i.e. motels, mixed use, things like that, where there's a high vacancy rate. They're sitting there, they're deteriorated. Why wouldn't they want you to come in, give them a little cash up front, and then take some money and go along the risk with you of you renovating it and getting it to be a real asset? Basically, seller financing, when the seller acts like a bank to you. Instead of you going to get a traditional loan or even a hard money loan, the seller lets you make payments directly to them. Usually, you're going to have a little more flexible terms than a bank would offer, right? They're not going to look at your credit, things of that nature. So basically, here's how this would play out, right? You agree on a purchase price with them, you negotiate a down payment. Often it's going to be smaller than a traditional loan. So if it's commercial, motel, you're normally looking at 35-40% down on something like that. Set an interest rate with them, set up a payment schedule, make sure it works for both sides. The seller will hold the note. They'll be in the first lien position so long as it's free and clear until you can refinance it later or at least sell it. So in today's kind of interest rate environment, high 6s, low 7s, even up to 8s if you're highly leveraged, 75-80% loan to value. You want to avoid some strict lending rules and close faster. Seller finance might be something to consider. It's a way to snag deals. Banks might be rejecting on you. For a seller, it can get them into a faster sale. And not only, like I said earlier, but the tax benefits from spreading out their capital gains from the sale. So think about it. Seller finance still works.